Hello traders, Mark Chapman here, the creator of the trademark Trap Traders Concepts. Welcome to today's Trap Traders Trade of the Day analysis. Today's date is Monday the 4th of December 2017, and in typical fashion, Monday is very quiet. There's not a lot going on this morning, very slim pickings, not very much happening in the news wires as per usual, and we've got the added bonus of it being December, so just bear in mind that Mondays going into the rest of the month are going to be probably even worse as traders finish up for the year. People don't necessarily like to trade thinner than usual markets, so but I just thought I'd bring your attention to the only thing that really is on my radar is this level of previous support. This is a 4-hour chart of the Swiss yen, and then it breaks and becomes resistance, right, and future resistance, and this is what the level traders are essentially hoping for, that it reacts as it's supposed to in their view, right, in the view of all the books and trading coaches out there that tell you this is indeed the case, and that's what we want them to be fully invested in that idea, especially on levels like this, because what that does is that means that their moves are very, very obvious. And here we go. They would have only known a certain amount of information at the hard right edge, so imagine we black this off. I never do these straight, so apologies. There you go, see, made a mess of that, but you get the idea, right? They'd have only known that much information plus the bit I missed off. So discount all of this, pretend it wasn't there, and just consider how a trader takes a trade. It's always based off of historical analysis first and foremost, to give them a sense of whether or not there is indeed a potential for a setup. As price starts to trade back into a potential level like this is where those traders, are just hoping that the level is reached, number one. Number two, that when it gets to the level, it'll actually respond in a way that they'd hoped for, and it's in that moment where the trader will start prepping themselves for an entry. So imagine excuse me, imagine this was all they knew, right? They don't know what's coming into the future, they don't really consider it. That's a downfall of many traders, and you have an engulfing candle at the level, right? That's usually going to be enough to get the vast majority of traders who are level traders into the market. What we do is we put ourselves in the shoes of the traders who we are competing against, so that we can outsmart them. There's so many traders out there who don't really think of trading like that, and they're just lambs to the proverbial slaughter, right? We want to become those traders in as far as we want to do our analysis up to the point of entry, and then we just want to wait. We just want to wait and allow it to unfold, allow the hard right edge to do the damage, allow the entry cheese to do the damage, allow the structures to do the damage, right? It all adds to the entry for the trader, and hopefully the demise from there, right? So when we have a really obvious, nice, well-defined level, it makes it very, very simple for us to do this. It also allows us to understand very clearly where these traders will place their stops. If they were selling in here, they'll place the stops above these structures, right? And it'd be like, if you could see the orders, there'd be lots and lots of orders clustering around this area. Because the traders are trying to manage risk, and they don't like large stop losses. It's just one of those things. People hate it, even though it's a function of risk percentage. People don't like doing it. They're taught to do it this way. They're taught that if they hide behind these swings, they'll be protected. There will be obviously orders further away, but they'll be more sporadic in nature. And if you think about an institution wanting to transact efficiently, which is what ultimately we're trying to mirror, they're not going to care about these one or two orders, right? That's not going to get their business completed efficiently. They need to, if this trade is to go down, right, they need to sell in the face of some buy, and these odd buy orders that are up here, right? Let's just call these, I was going to say B, but I'll write them out just so you can visually see it a little better. The odd buy order that's sitting further away from the level, why go for that? That's not going to allow them to finish off all the business. This is all in one place, all very close to each other, these prices, right? So it's a lot easier for them to do that, and plus obviously that's where they're going to get all their orders filled on the other side. So You know, why go for these odd sporadic orders further away? There's literally no point. They're after the meat, and he's the meat. And the reason those are buy orders is because those traders who are selling in here will place their stops, and it's always the opposite transaction to exit those positions. So as price goes up through the level, the process that occurs is those stops get triggered. The bank can start selling in the face of that buying, but also as it breaks up through the level, guess who goes long? Our friends, the breakout traders. And usually you'd anticipate, sometimes the market just keeps on going like that, right? But very, very rarely, most of the time you would anticipate a pullback, and it's in that pullback where you would anticipate another group of trader to go long, and that's your retracement trader, which is indeed what we currently see. So hard right edge, this was all those traders knew, right? Failure to go higher as well, like this is a structure failure trap with an engulfing candle. That's a short in most people's books, and then it continues on, and interestingly the candle that turns on them is what I refer to. It's the first trap I ever witnessed. It was and realised this was the game, and it's the outside candle trap. You see that there? That wick trades below the prior candle's low, right? So in real time, if I could fill this in, but well, go on, I will do while I'm on. Hang on, give me a sec. In real time, this looked negative, right? That was negative, and just a follow on of those prior candles. So in the context of how traders approach an entry at a level that had historically been resistance, then future support and resistance, etc. Given the failure to go higher there, given the engulfing candle, given this wick, this failure to go up, and then a follow through breaking that low, those lows, you know, that would have got most traders in. That's what I refer to as entry cheese. You know, if you're a level trader, probably the combination of all those factors would have been enough to basically draw most of them in, if they were going to take the trade, right? So if there is a level trader there, if there's a group of level traders there, if they were considering taking the trade, in my opinion, that would have been enough to get them drawn in. No sooner did they enter this trade, then the market reverses strongly, catching those traders. So as it goes up through the level, it starts stopping these traders out and allows the institution to start selling in the face of that buy-in. Breakout traders go in, as we just described, and then you'd anticipate a retracement and a bounce off the level, right? Which is obviously where we are now with those pullback traders. The retracement traders now going in as well, and it's not looking too great for them at the moment. But that's basically partial process that's going on, because obviously the process can continue. It can be a little bit more elaborate and is, but in this case, so far that's all the information we know, and this is what all the information they know, right? This is the type of entry that a retracement trader will love to take. A level that's been hit several times, breaches it, makes a new high, pulls back and starts to head up. That again, this would have looked convincing, more convincing than it currently does in real time. This candle, right? This candle was positive a moment ago, and now it's not looking so strong. But in the eyes of those traders taking those trades, this would have looked as if it was time for new highs, right? And that's what draws them in. That's what gets them to take some risk. And again, all of this is allowing the institution, it's allowing it to sell in the face of all of this buying. So it's just a bit of lateral thinking required to realise that, you know, these breakouts, these retracements, are not what they often seem.